Hi, this is Tony Gerardic of Summit Property Management. Today's topic is assessing and purchasing a small multifamily apartment building. There are a few things that you should consider when you're deciding to go into the multifamily apartment building arena. Different from a single family home, number one. But number two, there are two or three major groups of multifamily. The first group you want to consider is the two or duplex up to 4 quad. That's group number one. Group number two is, let's say, 5 units up to 15 to 20. Once you cross over into the 5-unit area, the type of financing that will be required is very different than if you're doing a 2 to 4 unit project. And then let's say the apartments that are above 20 units. So that's the first thing you need to consider. What do you have for money and what market are you considering to move it into? The second area you want to consider is, what is the purpose for the acquisition? I think we can all agree the purpose is to make money. Right? Very simple thing to decide. But really, let's step back and say, what is the true purpose here? Is this a long-term buy and hold acquisition that you're going to invest in over time that will eventually translate into annuity? Or is this a project that you want to buy, reposition, and then just change the whole dynamic of the property? Or third, which you can actually do in the multifamily space, a little trickier than a single family, but in multifamily, is this a fix and flip? You really have to consider that as you're assessing this, because the price you pay will drive the economics of the buildings as you go forward. The third component of this, which is related to the purchase price of the property, is, let's say you buy a $400,000 property. Doesn't matter if it's a duplex or a quad, whatever. Most lenders, unless it's going to be an owner-occupied property, will require 25% down. So if I use my $100,000 example, that would be 25% would be $100,000. That's $100,000 you have to come up with just to buy the property. How much cash do you then have in reserve after you purchase the property? Recommendation: have 1 to 3 months of cash reserves on the side that will be able to handle your mortgage, let's say mortgage, interest, principal, taxes, PMTI, etc., that world. The other is, have money aside to be able to afford a major unplanned event, such as prolonged vacancy, the furnace goes out, the foundation cracks. These things may be a few $1,000s up to $10,000. I can't tell you the exact dollar figure, but I will tell you this. Many investors I see actually find themselves in a situation where they buy the property, never planning for that major event to occur. It's never going to happen to me. I will tell you from personal experience, it has happened to me. And that's prolonged vacancy and problems. Without the cash, then you find yourself in a really difficult situation. The fourth thing to consider is, I've now bought a fourplex. I am a landlord. How involved do I want to be in this process? Am I an active landlord, meaning I'm out there, I'm fixing things, I'm dealing with tenants, etc.? That's a choice you have to make. But I say, go in there with your eyes wide open. It's all easy according to books and classes when things work correctly. But the problems happen when there's a problem. As in, how do you evict a tenant if you've never evicted a tenant before? What do you do with mold if you've never had mold before? So these are things you must consider, because now you don't just have a single family home. You are a landlord with a fourplex. And there are 4 families that you now must consider in there. Versus if you want to spend the expense for a property management company. Again, it's a choice you need to make. The last and final piece of this is what I would call efficiencies or economies of scale. Just because you spent $400,000, which may be a lot of money to you, in the world of vendors, bankers, etc., insurance companies, $400,000 means nothing to these guys. They view you as a small potato where you most likely will not get or qualify for any kind of discounts of any size. So getting economies or efficiencies very limited on just one property. When you start getting into multiple properties with a lot of units with longevity behind you, then you can actually start realizing economies, what we would call economies of scale or efficiencies. For more information on this or other topics, please visit us at echo-summit.com/education. Thank you.